Welcome to Buy, Hold, Sell. My name's James Marley and today I'm joined by Stu Welsh from Alfinity and Omkar Joshi from Regal. 30 years interest rates were headed in just one direction, but over the last 12 to 18 months we've seen a little tick up. So what does that mean for those stocks that were beneficiaries as rates went on the way down? Omkar, I'm going to kick it off with you. Transurban hasn't done a lot in the past 12 months. Buy, hold or sell?
That's a sell for us. So I guess Transurban's main issue right now is that a lot of it's already been priced in. It's only on a 5% dividend yield, and going forward it does have a potential ACCC risk around what it does with WestConnex, so it's a sell for us.
Okay, Stu, Transurban, buy, hold or sell?
I'd agree with Omkar. I think it's a sell. Key thing on the plate for them is they're bidding for this WestConnex toll road at the moment. A bit of a double-edged sword for them. If they win, there's the risk that they've overpaid and then they've got to raise capital to fund it, which will crimp dividends going forward given the dilution. Or if they lose, there's a new competitor in the Sydney Basin, which brings into question the growth profile. So I think it's a sell.
Okay. Banks, it's been an ugly space, disastrous start to 2018. CBA, the biggest and baddest of them all, buy, hold or sell?
Yeah, I would say sell there as well. I mean, it's just a tough revenue growth environment for the banks. The market's cooling at the moment and all the regulatory scrutiny is sort of increasing lending criteria, making it tougher to get loans, which only amplifies the slowdown in the mortgage market. Meanwhile, all the regulatory scrutiny is pushing costs into the business. So I think it's a tough environment. It's a sell. That's
not a pretty picture, Omkar. Buy, hold or sell on CBA?
Yeah, look, I think it is a sell as well, but I think near term it could actually do quite okay, just given that AUSTRAC issues have passed now. I guess a lot of the bad news is pretty well known, and the yield's starting to look reasonably attractive at roughly about 6.5% fully franked. So for that reason, although medium to long terms it is definitely a sell, short term maybe it does actually look okay.
Okay. A rare asset. You can't have a conversation about rate sensitive stocks without talking about Sydney Airport. Buy, hold or sell?
Sydney Airport's probably a hold. I guess they do continue to do better as you get a lot more of the tourism coming from offshore, and that obviously helps them given they are an airport. And then they've also got the upside as they do actually do more revenue initiatives around aeronautical charges, etc. So, but a lot of that's already in the price, so it's a hold here. Okay.
I was there last week. It's a slick operation, Stu. Buy, hold or sell on Sydney Airport?
I think it's a buy. I mean, I think it's obviously Sydney's an attractive location for people to travel to, and it gives you good exposure to the burgeoning middle class in Asia. Agree with some of the rate issues that could impact the stock, but at the moment I can see it sort of yielding 5.5% and growing that sort of in the low, not double digits, high single digit sort of range. So I think that's quite attractive.
Okay. Telstra, it can't find a bottom. Buy, hold or sell?
Yeah, I think that one's still a sell. It looks optically cheap, about 9 times earnings, but there's obviously some question marks about whether or not those earnings are going to materialise, given some structural changes that are going on in the industry and obviously intensifying competition on the mobile side as well. So for those reasons, I think it's a sell.
Yeah. Omkar, Telstra was in the dog box last year. It can't climb out so far in 2018. Buy, hold or sell?
Yeah, I think it's a hold here. So I guess a lot of the bad news is starting to get baked into the price now. The dividend's probably going to get cut, but it's reasonably well known now. But the mobile market does stay competitive still. So to be honest, definitely wouldn't be a buy, but it's probably more of a hold now, given where the share price is.
Okay. Insurance, one of the areas of the market that was going to benefit from rising rates. IAG, it's been a cracker over the past 5 years. Buy, hold or sell?
That's a hold now as well. And the simple reason for that is I guess a lot of the things that are going well in the business, premium rates are improving, margins expanding, so it's all going the right way. Capital's great for them as well. The only problem is it is on 19 times now, so it's starting to push up there in terms of multiples, although the business is fundamentally in excellent shape.
Okay. Buying other people's problems, Stu? Can you get excited about IAG?
I think it's a buy. It's a pure play exposure to the domestic general insurance industry, and there's positive pricing movement there in terms of both the personal lines and commercial lines businesses. I think it's a buy.
Okay. There's a few issues in the interest rate sensitive stocks, but there's also a few ideas. Don't give it all up just yet.